In this presentation, we're going to record the payment of sales tax. In other words, we've been recording sales tax and collecting sales tax on those sales that require us to do so. Now we're going to be making that payment of the sales tax to the state or local governments or the governments that are requiring us to collect and pay it. Here we go with Xero. Here we are in our Get Great Guitars dashboard. We're going to be opening up the trial balance once again. So we're going to go to the accounting drop down. We're going to be going into our trusty TB, our trial balance. Once that opens up, we're going to duplicate the tab by going on up to the tab up top, right clicking on that tab, then we will duplicate it. We'll change the date, making that date to February because that's the month that we will be working in. So we're going to change that up to February and update the report. Now, just a reminder, let's take a look at our flow chart here. And we're going to go to the QuickBooks desktop just to take a look at the flow chart. Note what typically happens is we create an invoice and we receive payment on the customer side, and then we record the deposit. Now, taxes have to kind of like work their way into the system somewhere. They're kind of going to cram their way into the system somewhere, and what that happens is typically we're going to have to create and collect the sales tax as consumption tax if we're required to do so. Now that will typically be calculated when we create the invoice or create the sales receipt. So we're calculating the sales tax and we're saying, hey customer, you have to pay us what we charge plus the sales tax, which we have to collect and then pay out to the government. So you can see there's kind of a timing difference that happens here. We're going to be collecting the sales tax as we create the invoices and the sales receipt. We're going to be holding on to that sales tax, which we will then have to pay out at some point in time in the future to the state or the local government, whoever's forcing us to do the sales tax thing. So that's what we'll end up doing at this point in time. So that's going to happen. There's got to be some kind of cutoff that will typically happen then, and it's going to change from location to location, state to state. In other words, when do you have to pay the sales tax? We're going to be collecting sales tax as we make the sales. The liability will be increasing as we make the sales. Then we're going to have to pay the sales tax. Typically, it's like quarterly that you would have to pay the sales tax. So you collect sales tax for 3 months, let's say January, February, and March. And then you have till the end of April, possibly, let's say, to pay the sales tax for January, February, and March. Again, it'll differ by location, but you can see how that will kind of work. We're going to collect the sales tax for a period of time, then we're going to pay the sales tax afterwards. For the purposes of this example, just so we can see the sales tax as we go through only 2 months of data input, we're going to say that happens on a monthly basis. So we've collected the sales tax for January. It is now February. We're going to be paying the sales tax for January, even as we collect more sales tax in February. So that's going to be what we do now. If we go back to our report then, going back to the, let's take a look at an invoice. Let's go back to the trial balance just to consider an invoice. If we go down to the merchandise sales and go into the merchandise sales and pick one of the invoices that we have made, remember that in the United States, when we make sales, that's typically when we may be subject then to sales tax, which is typically not a federal tax, but state and local tax. If I was to just pick an invoice here and see how the sales tax would be calculated then, as we've seen in the past, we have the invoice here. Total sales, what we're going to collect from the customer is $851.25. We only get to keep, in this case, $777.4. The $73.85 that we're going to get from the customer is increasing the sales tax. So that's when the sales tax is increasing on the liability side of things. Let's go back on up top and go back to our trial balance and take a look at that liability account then. So we're going to go back up and we're looking at the sales tax payable account. So if we go on down to the, let's go back one more. We're not to the trial balance yet. This is the detailed report and we want to be on the trial balance, the trusty TB. So here we have it. Now we're on the trial balance and we want to be in the sales tax. So I'm going to go into the sales tax, that $414.90. That's what we owe as of now. However, we're not going to pay the full $414.90 because we're only going to be paying the sales tax, we're going to say, for January. So in other words, you can see this is increasing, and up through January, here's where the balance is as of January up to this point. So the running balance is at the 234.40, is due as of the end of January. Then this is going to be for February. So now it's February right now. We're going to assume in our practice problem that we owe the sales tax for January. It's due by the end of February. So this $234.40 then is what we're going to be paying for sales tax. So let's go back over to the first tab and let's go ahead and go to the plus button. And I'm going to say this is going to be money spent. So we're going to be spending money. I'm going to say it's coming out of the checking account. So we're going to say it's going out of the checking account. I'm going to say it's to the tax collector. And obviously it would be to the state or the local government, whoever is the tax collector. And we're going to say that this is going to be happening, and we're going to do it in February. So we'll say February, let's say 27th, February 27th. If it's a check, you can select the check item to print out the check. We're going to say this is sales tax payment for January. And the amount is going to be for that 234.40. And it's going to be going to an account. It's going to be going to the liability account because this is going to be decreasing the liability. It's not going on as an expense. Liability account will then be decreasing. That liability will be the sales tax. Account 2200, the sales tax. If it has the 22 numbers, anything that's in the 2 area is usually going to be a liability type of account. So that can kind of help you out to see how it's going to line up. And it's not going to be a check. We're just going to say it's going to be an electronic payment. If it were a check, we could then check the check number and check that off as well. What's going to happen when we save this? It's going to be decreasing the checking account, the other side decreasing the payable account. I'm going to update this, or you could record it. I had to update it because I had to make a change to it, but we're going to record this. There it is. And now let's go to our trial balance. We're going to update the trustee trial balance. Go on down to our checking account. We should have a cash going out for that 234.40 that we paid. We paid to the state so that they don't, put us in jail or come threaten to break our thumbs or anything like that. So we got there's the 234.4. That's going down to the tax collectors. The tax collector's happy. We're going to go back up top, and we're going to say that the other side is going to be to the sales tax payable. So we're looking for the sales tax payable account. And there it is. It's still got the 180.50 in it. So let's go into it and take a look at the detail for that. And then if we scroll on down, we could see our detail for January, and you'll see that it goes up to this point at the 234.40, and that's what we paid off down here. So it went up to 234.40. That's what we paid off. So it would be down to zero, after that payment, except we paid it down here, right? And after the February transactions. And then we have the February transactions, which of course we have not yet paid off. Those will be paid off in March. So we have the running balance of the $180.50, which will be due once everything is accumulated up through March. We'll pay that, or up through February. We will pay that off sometime in March. That's it for now. Let's get out of here.